Time to think wealthy, and it's been a month since Brexit and the big sell-off that happened in the stock market. Financial advisor Dave Wentley is joining us to talk about the lessons learned in the 30 days that have passed. Well, somebody was sitting here 30 days ago when everyone was in a collective panic about the big sell-off going on across the world after Brexit, and you said, everybody sit tight, check in with me in 30 days, and let's see where we are.
Right.
And we kind of looked at you, and sure enough, if you had panicked and gotten out of the market, you would have been in a world of hurt.
You would
now,
have lost
instead of then.
You would have 6 to 10% possible losses in the portfolio. Never mind the almost 3% recovery over and above that. And I was just cautioning people not to jump out of stocks in a short-term event. Even if we were lower today, we would know more. And I think you really need to stay invested and understand that short-term events are going to happen. They're going to knock the market down. But the market doesn't stay down. It will come back up.
Part of the problem about jumping out is then you've got a time getting back in, and that can result in money lost as well, right?
Yeah, you have to be right twice, and I don't know anybody who does that consistently.
I mean, not even you guys.
No. I'm a buy and hold advisor and personal investor. I adopt what Warren Buffett said many years ago: own the company, don't own the stock. Own the company, believe in it. And give it a 5-year window, unless something really bad goes wrong, hang on to the company or the fund or whatever you're in.
Something about looking forward, we've had one interest rate increase, but there's talk of another, then there's talk that they're going to back off and not do it.
Right.
What do you think that's going to do to the markets either way?
Well, I think it'll add to volatility. My guess is we will probably see one more this year, probably after the election. I don't think they like to look political, so probably after the election. We had a strong jobs number last month. Inflation is sneaking in. Wages are bumping up. Things are looking pretty good from the fundamental side of the economy.
Not to be stock specific, but looking forward, are there any sectors we should look at as investors and savers?
I think if you're a long-term investor, not trader, long-term investor, I would look at technology. Look at the big blue chip companies. I mean, look at your Facebooks. Look at Microsoft. My gosh, what Microsoft has done the last 3 years under new leadership, it's been incredible.
Yeah, Microsoft's really fine.
Yeah, they own the cloud, as they say. But I would certainly, and always, I would never pass up on the big old strong companies that we all know and love, whether it's Home Depot or it's Coca-Cola. And if you're buying exchange trade funds or mutual funds, buy those that have these big blue chip companies in there that have a history of paying dividends, because they'll fall when the market falls, but they always rise. So.
Well, if somebody says, okay, Dave, you're right, I didn't get out, you told me to wait 30 days, but I do have money on the sidelines, so I did not invest, just waiting, but you want me to get into it, you're suggesting, say, a Facebook or another blue chip. They're pricey for some people. Are there any?
They are pricey.
Are there any ETFs or any municipal, anything, not municipal, but mutual funds that you can get into that would have this real fast? We're out of time.
Yeah, I would look at the S&P 500 stock index. I would look at the NASDAQ index. Those you can get in at a reasonable price.
And watch it grow.
And watch it grow over time, yes.
If you stick with it over time.
If you stick with it. More than 30 days.
Thanks for the wealthy advice. We appreciate it.